Hey folks, Dan Frio here, the rate update. Today we're going to go over what rates did and why I do this. So don't go away. We'll be right back. Hey guys, my name is Dan Frio. I do the mortgage update every day. I've been in the mortgage business for over 32 years. The reason I do this video every day is just to educate you guys and just show you, or hopefully we can prove our credibility to you guys that we're here, we know what we're doing, we have among the best rates in the country, low fees. But are we going to have the lowest rates in the country? No. Are we going to have the lowest fees in the country? No. But what you can count on is if there's possibility of getting your loan done, we'll get it done. And here's why. Is people talk about, real estate or mortgage companies and banks and brokers and so forth. Here's what we do just to set ourselves apart from a lot of other lenders. We're among the top 15 mortgage companies in the whole country. We're not a broker. We're not a bank. All we do are mortgages. We specialize in mortgages, okay? So let me give you a little bit of backdrop too in the mortgage business. There's basically three entities out there that do probably 90% of all the mortgages in the country. And that is Fannie Mae, Freddie Mac, and Ginnie Mae. You've probably heard of Fannie Mae. It's not Fannie Mae Candy, it's Fannie Mae. Freddie Mac is the same thing kind of as Fannie, but they're just a different entity. And then Ginnie Mae does a lot of government mortgages. So we are a direct lender to those companies. So we underwrite according to their guidelines, and then we have the ability to then have them service these loans for us. So the reason why that's important to you is if you're going through a bank that basically just kind of dabbles, I won't say dabbles in mortgages, but they have mortgages, car loans, credit cards, checking, savings, all this other stuff. They probably don't have a direct link to Fannie, Freddie, and Ginnie. That's one. Two, they don't usually like to have excess risk in the mortgage business because that's not all their business. They don't specialize in that. They specialize in a whole bunch of stuff. Okay, that's the first part. If you go with a broker basically, they're going to get your information and they're going to use lenders like us to get your mortgage done. So instead of going through a third party and have excess cost and fees, you can go straight to the horse's mouth, I guess is the best way to put it. Okay, the benefit of being able to use us because we go through these entities directly is to avoid one of the biggest things in the market that the consumer doesn't know really anything about. It's what we call overlays. Okay, overlays are things on top of the Fannie Mae and Freddie Mac guidelines that banks just don't want to, dig down into that deep of a hole. Here's what I mean. Credit scores. Let's start with an FHA loan. FHA truly has a minimum credit score of 500. You could call 500 lenders in the country today, right now, and you probably will not find one lender that'll take your loan unless you have a 580 credit score, okay? We're one of just a few companies that will do FHAs with a 580 credit score, okay? 580 then is an overlay on top of FHA's true guidelines of a 500 credit score, okay? But the backdrop is you could call probably 100 banks and brokers and say, I have a 590 credit score, and probably 99.9% of them are gonna say, can't help you. Because you need a 620 credit score, or you need a 600 credit score. Well, they don't explain to you that that's their guidelines. That's not the FHA guidelines, okay? So that's what overlays are called, or overlays, where overlays play a role in mortgages right now. So as a consumer, I used to have people call me and then they'll say, well, Dan, how did you get this done when 5 other places couldn't? We don't have overlays. So then I thought about how can I hit the masses and educate people on this, and along with a lot of other farce or misinformation that I saw in YouTube in regards to credit and all this other stuff. So that's why I started my channel, is to educate people. And then hopefully in that event, you find the credibility in us, the value in us, and you use our services. Okay, so I mentioned this the other day. If you're looking for a no frills, nothing, you don't need help, and you're just like, I want the bare bones interest rate and fees, I might not be your place. I like helping people and walking them through why we're doing this program. What does it entail? Why did we choose that program? And a whole bunch of other things. If you're out in the market right now, you're finding it very difficult to get your offer accepted or even find a house. So let's say you go to the big banks and it's Friday night at 9 o'clock. And you need to put a bid in, but the seller wants an extra $5,000 than you're pre-approved for. So you try to call up your banker and say, hey, can I get pre-approval for $5,000 more? And nobody picks up, okay? That's that. If you're working with a broker, they need to access to us so we can look at and review the file to see if we will approve you for the $5,000 more. So even if they pick up the phone, they can't make the decisions. On our side, we have all the technology. All my loan officers are using laptops and their phones and everything else to have access to all these features. I don't care if it's Saturday or Sunday at noon and you need an updated or revised pre-approval, we'll be there for you because you're going to have a loan officer assigned to you, a loan officer assistant, a processor, and I'm almost always available if you email me or text me. So you're going to have access to us basically 24/7. So that's why I did this channel, is to educate you guys and also to give you the differentials between, maybe going with a place that has the lowest rates even possible and no fees, but you can never get them. You don't know what's taking so long. You don't know where you're on in the process. The frustration is huge. Most of the time, let's say the rate differential is 0.125. You realize on that, in that change of rate, your rate or your payment differential might be less than $10. So for an extra, $9 in your monthly payment, is it worth using a company like myself that has access to all the programs, access to the underwriters? We fund our own loans, we control the whole process, and we keep you up to date. So that's basically why I do the channel. So now the backdrop is what's going on with rates. So let me explain rates to you guys, how they kind of function a little bit, how they're determined, and then we'll dig into what today's rates are. So we first go to the headlines, and I post this newsletter every day. And so you probably, if you're in any of my social media, you saw this. Mortgage rates are low and stable, but face big risk tomorrow. Tomorrow we have a jobs report coming out, and that can play a role, and many times it does play a role in what's happening with rates. So right now we had the unemployment rate come in today, or initial jobless claims, and they were much lower than was expected. That's phenomenal. Now tomorrow we're going to have non-farm payroll and the unemployment rate. Okay, they're expecting it to go down from 6 to 5.8. It might even be lower than that. So what can you expect if the number comes in really good tomorrow, where there's a lot of people back to work? Well, I hate to give you this information, but the hotter the economy keeps getting, the fear of inflation keeps rearing its ugly head. The fear of inflation is going to cause, and it does do this, a lot of times the stock market to start to pull back and mortgage rates to go up. Why are we at just the lowest rates in history ever? Because of the pandemic, because the economy was in the tank. As we move out of the tank, we start to get more and more back to neutral, back to normal. So rates are only going to go up. They can only really go up. I love that they're stagnant right now. It gives a lot of people the opportunity to buy and refinance. But a lot of people are still just waiting on the fence just for that ultimate bottom. Guys, you're going to miss it. Very rarely can you perfectly time this. I'm in the mortgage and I can't even time it precisely because you don't know what tomorrow's going to bring. So that's that part of it. So let's get back to the charts. What happened today? Well, people follow me because of this number right here, okay? And let's dissect it a little bit more in detail. This number right here that we're focusing on is a mortgage-backed security, okay? It references the MBS. It's a bond that trades on Wall Street that is the biggest component or the primary factor when it comes to mortgage rates, okay? So what happens is this is what's going on with the price of the bond, okay? As the price goes up, rates or yields come down, Okay, that's Bonds 101. Check out a lot of my other videos. I explain how bonds work. But there's an inverse relationship. The higher you pay for a bond, the price, the lower the yield rate of return or your mortgage rate. Now, if this number is going down, means the price is going down, the yield on that bond is going up, so your mortgage rate's going up. That's the best way I can explain that. We're in a nice little cycle right now. This is what's happening in the last quarter, but for the last month and a half to 2 months, we're in a nice little rally stage right here. I follow this right here because of a lot of technicals. What I'm trying to do is predict, where we're going to be in the short to mid-term. So I go through this and I say, okay, here's the charts that are going on. Let's exclude a lot of the exterior data coming in. Let's just, based on charting, where should we be and where should mortgage rates be? So we go into this chart and we see a lot of lines here. These lines, and I'll explain them to you, are technical lines. These lines that go straight across are what we call Fibonacci levels. Okay, they're creating a ceiling and a floor on where this price of the bond should be trading. So as it trades up and it hits this resistance level, it'll probably pull back a little bit. It's kind of like a bumper. If you take your little kids bowling, you put up bumpers along the side so the bowling ball kind of bounces around but stays within this range. Well, the Fibonacci levels are basically technicals of which we should stay in between. Okay, the nice thing is we broke out of the technicals right here. So the Fibonacci level, it did validate its position because we hit right there, we hit here, and we hit almost every day this week right through these areas here, and we stopped. The nice thing is yesterday we closed above this Fibonacci level. Today we opened up and closed above this Fibonacci level. So let's scrap this and erase this whole thing, and let me show you kind of what the trend is now based on this. Okay, so right now we came past this Fibonacci level, or exceeded this Fibonacci level. Okay, so now that creates the new floor. Well, what's our new ceiling? Well, let's take out that number. Let's start using these other lines. Well, all the other lines, although they represent, first off, the brown line is a 25-day moving average, the black line is a 50-day moving average, and the purple line is a 100-day moving average. So if you took all these numbers and averaged it, this is where we should be, okay? Well, we've exceeded all the technicals except the 100-day moving average, which is right here. Okay, so now for the short term, the next couple days, this is going to create our ceiling, and this is our floor, a nice tight range right here. So what's this telling me? We're probably going to be stagnant because we're right in the middle, but we have just a little bit of ways to go down. And again, when this goes down, rates go up, and we have a little bit of variance that we could possibly go up until we hit our next resistance level. So basically what this is telling me, in the short term, rates should pretty much be stagnant, okay? So that's that. So let's see what happened just today. There wasn't really much news that came out today, but the nice thing is we rallied throughout the whole day. So the beginning of the day, we were stagnant, and then all of a sudden we took off, which is great. The other good thing about this is we ended the day on a green candlestick, a pretty big green candlestick. This is telling us there's more buyers in the market than sellers. So that should continually drive up the prices of the MBSs, which then in turn brings down rates. Okay, so now what are rates today? Well, I follow a trend here of this is indexes. They go all over the country and have mortgage lenders write in and give us their daily rates, and then those numbers get blended and averaged out. So we do this chart is representative on 30-year rates. So 30-year conforming, jumbo, FHA, and VA. So once they compile all the data through mortgage lenders throughout the whole country, here's what the rates are and what they're doing. So right now the current rate is right here. So conforming is 315, jumbo 318, FHA 318, VA 271. Okay, what's it been doing in the last couple days or months? So the 1-day delta is a 1-day change. 7-day delta means change, so a 7-day change and a 4-week change. So basically over the last day, things really never moved. 2 basis points, what that represents is 0.02, virtually nothing. So you can see that there's really nothing there and nothing here. Over here is when you start seeing a little bit more of a change. Over the past month, on average, we're about 0.125 lower, so an eighth lower than where we were a month ago. Okay, so that's nice. Everything is starting to stagnate. So that's where we are. So what I ask you to do is, if you're in the market if you need pre-approved, let us know. We can pre-approve you in minutes. And if you use our app, you can basically control almost everything on your phone. And I'm going to show you how to do that at the end here. But if you're looking to refinance, or you're like, does refinancing make sense? Let us know. Email me a copy of your mortgage statement and say, hey, here's where I'm at. What would you suggest? And then I'll get in touch with you, or we'll schedule an appointment, and we'll go over. And I want to get into your thoughts. What's your game plan? You're looking to just save money right now. You're looking to pay off the house as soon as you can. What are you looking to do? If you're in a forbearance, meaning you basically stop making your mortgage payments because of the forbearance agreement that you got into, part of the CARES Act, it's going to come to an end soon. What is your exit strategy? And please don't say, I don't have one. Because when it comes due, there could be multiple things that could happen to you. And the worst one is that you get a statement from your mortgage company saying you owe us $20,000 and you're going to freak. So don't push off, or don't kick the can down the street there. So there's a lot of things we can help you with. I have programs from conventional, FHA, VA, USDA, reverses, interest only, jumbos. If it's a residential loan, I most likely have it. Okay, hopefully we can be your one-stop shop where you don't have to kiss a million frogs to find the one place that will do your loan. And also, what happens as you kind of go all over the place and have people keep pulling your credit and giving you rate quotes and everything, you're driving down your credit scores, and you're only shooting yourself in the foot. So how do you find out more about me and my team? Well, first of all, I'd like you to go to my channel, my main channel. It's The Rate Update with Dan Frio on YouTube. There's over 800 videos, and there's got to be something there that tickles your fancy. If not, let me know, and I'd be more than happy to dig in or do an in-depth video on what you're requesting. The next thing is, how do you get a hold of me and my team? Well, here's the app. The mobile app's right here. And I'll just reference it as the application. Okay, the application is right here. You can click that, and basically it'll take you from start to finish to funding. The key's in your hand, and you can follow it on your phone. So that is the number one thing I'd ask you to do. The second thing, if you don't do it that way and you're like, I really want to call somebody or something else, go down here, give us a call at 844-775-LOAN. That's what most people do. They do that, or they go to our calendar. You scroll just up a little bit, and you can pick between a 15, a 30, and a 60-minute consultation. You just click into it. It'll pull up all the days. You click, say, next Wednesday is a perfect time for me at 10:30, and you click it. I'll get an alert, you'll get an alert, and then we'll get in touch with you either by Skype, Zoom, or by phone. So that's the best way to do that. If you want to email me, you can email me, and I'll give you that information here at the end. Well, I'll give it to you right now. My email is pretty simple. It's D for Dan, Frio at preferredrate.com. So dfrio at preferredrate.com. That's the best way to do that there. I just created and revised this website. If you're looking to get a free credit scores, or you need help with your credit or anything else, please go to creditscoresandmore.com. You can get a free credit scores right here. There is no strings attached. It's truly free. And if it asks you for any of your credit card information or to do any upgrades, don't do it. I'd highly suggest you not do it. And then you can get your true credit scores here, and I'll explain that in a video next week. You can get credit repair, and you can also get identity theft protection. With all the breaches going on today, you probably need something that's monitoring your credit. And there's a whole slew of information in there in regards to your credit and so forth. So that is it today, guys. All I ask you to do is give me a thumbs up. I hope we can hit 200 thumbs up today. I would greatly appreciate it if we could. Next thing is click down and subscribe, and then hit the bell so every time I post a video, you get an alert. Guys, my daughter is graduating college tomorrow, so I won't be in and I won't be posting a video, but I'll try my best to post one over the weekend to give you guys some educational information. So other than that, God bless, be safe, take care, I'll see you soon.